Good afternoon, ladies and gentlemen. My name is Romia Costa, and I am the head of investor relations of the JOST Werke AG. Today, we publish our results for the fiscal year 2021. And I am pleased to inform you that we achieved all our financial targets for the year. Our sales grew by 32% to 1,049 million euros for the first time in the history of JOST, surpassing the 1 billion revenues. Our adjusted EBIT grew higher than sales by 43% to 105 million euros, which allowed us to expand our adjusted EBIT margin by 0.8 percentage point to 10%, so that we are now back on the double-digit adjusted EBIT margin range. Also, our working capital was below the targeted threshold of 20% of total sales, despite the activity levels rising considerably compared to prior year. And of course, with these results, we managed to considerably improve our leverage to 1.45 times adjusted EBITDA. So when we look at the year 2021 and see what were the highlights that allows us to achieve these results, we see that JOST managed to grow in all its regions, both in transport and in agriculture, despite a very challenging supply environment. And you remember probably all the material price spikes that we had last year, especially for steel, which is one of the main parts that we need for our components. Despite this, given our high operational flexibility, we managed this volatile environment, also a volatile demand on the side from our OEMs, which were partly affected by logistic constraints and supply chain disruptions, especially semiconductors that caused some of them to reduce their call-off on short notice. We managed, despite all these, to achieve these results, showing the flexibility of our operations. And at the same time, also, and that's something we are quite proud of, we improved significantly on our energy efficiency, reducing our carbon footprint per production hour, also caused by the much higher efficiency and higher utilization rate of our production plants. We want our shareholders to participate in this result and are proposing to the annual general meeting this year a dividend of €1.05 per share for the 2021 year. If we dig a bit deeper into the results and look at how it came, we see here and on the left side of this slide what I mentioned before, that both agriculture and transport contributed tremendously to the growth. And I have added also the 2019 year here before the acquisition of the ALO Group that increased JOST's footprint in agriculture by a significant range, to show you also that 2020, of course, was affected by the COVID pandemic. And you see that when you look at the blue numbers, which would be JOST Transport. And we are now have grown compared also to the year before the pandemic with 785 million euros in transportation. What's important to keep in mind when you look at this is that we also had a lot of price increases last year, passing through some of the costs from materials to our customers, so that here we are not yet there on the volumes that we saw in the year 2019, which also lets you know that there is more room for growth in the upcoming years. Also on the agricultural side, we grew by 43% compared to prior year. And that is a tremendous growth that we actually did not anticipate when we acquired the company, because usually the ag side of the business tend to grow on the sort of low to mid single digit. But here, this 43% increase compared to prior year is quite an achievement, especially that we managed to get all those parts out of our production facilities. Now, if we look at the bottom side on the adjusted margins and adjusted EBIT growth, you see also what I mentioned before, that we are back on the double-digit range with 10% adjusted margin and 105 million euros total adjusted EBIT. And here, of course, the improvement is quite significant compared to the pandemic-affected 2020, in which we had plant closures all across the world, given the outbreak of the COVID pandemic. We are not quite on the level of 2019 yet, but that is mostly caused from material cost increases and the logistic disruptions that we see this year. And there too, you see there is potential for improvement going forward. Now, if we go to the regions on the right side of this slide, you see that all regions contributed to the growth that we achieved. Europe, 28%, in absolute numbers, 136 million more than in the previous year. There, we managed to outperform the markets, which grew on around between 15 and 18%. In North America, 50% growth compared to prior year. They're also supported by market share gains, both in transport and agriculture. And in Asia Pacific Africa, we also grew by 23% compared to 2020. And here, to keep in mind, it was a bit of a mixed bag because the Chinese market had a very strong first half of 2020 and then contracted very sharply in the second half of the year after an emission regulation came in place that caused the market and led to a lot of pre-buy effects in the first half of the year. Despite this, given our very strong presence in the other countries in the region, like India, South Africa, the Pacific region, we managed to grow in Asia overall by 23%. And looking at the profitability on the regions, you see Europe was a bit more affected, reaching only 7.3% adjusted EBIT margins. Here in Europe, we saw more of those disruptions I mentioned from OEMs canceling their orders on short term, given the lack of semiconductors. And also Europe bears the bulk of headquarter costs for the whole group. So that was one of the causes for the profitability in Europe. The other regions did much better, 9.1% in North America, and in the Asia Pacific region, we also achieved a margin of 17.5%. What does it mean for JOST when we look at the year 2022? This guidance is under the assumption that the war between Russia and Ukraine will remain limited to the current countries being involved and will not spread geographically further, and also that it will not, at some point, it will come to an end. The direct impact of that conflict on JOST sales is very limited, and those, so as of today, we believe that despite these uncertainties, we can still achieve mid-single-digit growth of sales compared to prior year, and that our adjusted EBIT should grow in line with sales following that development, which will then translate to an adjusted EBIT margin that should be more or less stable. And this is something that we believe we can achieve given the high operational flexibility we already demonstrated in the years 2020 and 2022, which allows us to cope with a lot of volatility in the markets and in the supply chain. Overall, we believe that our CapEx as a capital expenditure should be 2.5% of total sales. That's a level we feel comfortable at, and that it is enough to grow the business. With that, if we look in conclusion, we had a very successful year 2020. 2021, we want to build on that basis for 2022 and see potential for growth for JOST, given our very good position in the markets and across all regions and in both agriculture and transport. Thank you very much for your attention. If you want to learn more about JOST, you can always check out our webpage or contact Investor Relations at any time. Thank you.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.